It's Ed, and the future is now, and the future is cost-based averaging. Everybody needs to understand this principle and how it works. Okay, if you invest at all in any way, shape, or form in stocks, you should understand this concept. I put together a spreadsheet. It took me maybe a half an hour because I have to do it for my purposes. I don't have to, but I'm doing it because it's smart to do it. It gives me that plan again. We talked about that before. You have to make a plan and you have to try to execute the plan. Okay, you just can't just randomly guess on things all the time. So anyway, getting to the spreadsheet. Okay, basically, this is Tesla cost-based averaging. Upper left-hand corner, you can see right here, these are shares, numbers of shares, 50, 50, 30. In blue are actual purchase shares at these actual numbers, 628, 589, and 565. Tesla's already below that right now. I think it's even bottomed out to maybe 519. So we're already even below this. So now I'm kind of forced into a cost-based averaging, or I can just take a loss on that position move. So basically, I'm trying to figure out, hey, let's weigh it all out. Let's figure out how we want to go with this. Okay, so you can see the costs here that we've already incurred there. Okay, on those. But now let's try to figure out if we're going to cost average on this side in yellow. These would be the shares that I would add. As you notice, they're increasing 30 and then 40, 50, 60, and then even 100. Okay, but these are the prices that the stock would have to fall to. So let's say it falls to 450. Okay, no problem. We buy 30 shares at 450 for 13,500. We add that to the overall position. And then let's say it drops to 350. Well, we add 40 shares at that point for 14,000, which is basically about the same amount, but we're adding 10 more shares. So, and then you could see in gray would be the total amount of shares that we would have accumulated to the left. So we would have 200 shares total here, and the total accumulated cost would be 105,000. Okay, and then you can see if we had to buy at 250 a share, 50 shares there for 12,005, then we'd have 250 shares cost averaging at 117,000, and then 310 for 126,000 total if it dropped to 150 a share. Think about it, Tesla at 150. I mean, it was at 177 per share less than a year ago. So, I mean, it's possible that it could come down to 150, right? Is that possible? Well, I mean, I'm just putting out possibilities. So then we would add 60 shares there, excuse me, for 9,000, and that would be 126,000 total cost averaging. Okay, and if it came down to $50 a share, which means basically the company's almost bankrupt at that point, and they would be basically selling all their parts off, more or less, and all their factories off, that's probably about what the cost would be. So anyway, so you can see how we can add more and more shares at a lower price each time, and then you can see that the add would be lower. So we were adding 14, and then we add 12.5, and then we add 9,000, and you would see the total accumulated there. Okay, you got that? So that's the first thing I figure out. What are possible buying points, and how many shares would I add based on capital that I have to work with. Let's say I have 130,000 to work with, 120,000 to work with, so I've got to figure that out. It depends on how much you have to work with and your shares that you currently have. So, and this is the way to figure it out. So now if we go to the middle here, okay, this block, this is important. Okay, this shows from 410 on the left-hand side. That would be if we went all the way down to $50 a share. Very unlikely, but I'm still putting it on the chart just to show you. I'm not predicting this by any means. That's super unlikely. And we'll get to the percentages on that down the road in a minute. So anyway, if we did, we would have 410 a share. You can see we would have 410 the whole time. Well, how do we get even then? How would we get even? If you come over here and you see it here, to get even, I would need to clear 131,000, which means the share price would have to get up to $350 a share from 50 bottoming. Okay, So that would have to do that to get to the break, or actually that would be profitable by about 12,000, but still basically the break even spot. Now, let's say we only get to, it bottoms out at 150 for 310 shares, okay, at a total cost of 126. Well, we would have to get back to $450 a share at that point from 150. And same thing goes down here, where we would have to get to, let's see, it would be 117,250 or 105 at 350. So where are we at? I'm sorry, 250 here would be, let me see, I hope I didn't make a mistake on here. No, I didn't think so. Okay, hang on. So essentially we would have to go from 250 a share to 450 a share, okay, to get to our break even, or a slight gain of 5,000. Okay, so that's not too bad. Well, let's say it bottoms out at 350. Okay, we would have 200 shares, so it would have to go from 350 to 565. Okay, and we would be in for 100,000 on that position total, and we'd only have 200 shares. So you see how that the green is basically, anytime you see the green, that's our break even or a small profit. So we have to get those shares, or those shares would have to come back at some point in time to that level for us to get back to our even zone. Okay, so, and anyway, you can see right on this side where I put the price, the two prices, it has to go from 50 to 350. This is the times it would need. This would be 7x. So if it drops down to $50 a share, it would have to 7x to 350 to get us back to even. If it drops down to 150 a share and it has to get up to 450, it'd have to go 3x. Or if it drops to 250, it would just have to basically 2x from there. You know, that's pretty easy, you know, in that situation. The same thing. Now you'd have 1.6x if it only drops to 350. Okay. So anyway, so that's kind of how that works. It shows you how many times that you're going to have to, you know, how many x times you're going to have to multiply for that to get back to your break even. So that gives you kind of an idea. Oh my gosh, if it drops down to 50, I'm going to have to 7x. So that's very unlikely at that point to get back to your 7x. So if you think for any minute that it's going to get to $50 a share, you probably shouldn't cost average this. I would just write this off. Say, nope, not doing it. So realistically, I would just delete that line off of here. But I'm going to leave it on there just for an explanation so you guys see that's an unlikely possibility. Now, we also have on the right side in this grid where you have the max high at about 950. I mean, I'm just ballparking here. I don't have to be precise. It was 962 or something. I don't know. Anyway, max high. And then the price that it's at now, these are current marks where I bought it in. And then what's the amount of dollars per loss from the high would be 322 from the 950, which would be a 34% loss. Okay? So, and then when it hit 589, it was already down 38% from the high. And when it hit the 565 when we purchased, it was down 41%. Now, remember when I talked about in 08 when I was day trading Apple and I saw the turnover, got out of that situation, just like I did on Tesla at 850. It was the same scenario here, is that it was there. I basically got out, now I have more money, but it was a different dive. This is almost a straight, you know, cliff dive, okay, down to the ocean. I mean, you're talking about like 2.5 weeks. It's like basically, you know, lost all this value. Anyway, so what is it at now? It's at about 519 after hours. Okay. Assuming I post this video on 3/12. Okay. It's about 10 p.m. Anyway, so let's see, where were we? So anyway, so if it drops to 450, okay, that would be 53% from the all-time high. Okay. Pretty realistic. Apple dropped 60% from 202 to 90 a share, okay, in that recession. Okay, so if we go into recession here, similar, this is why I put it in yellow. This is the most likely situation. Granted, it's a different animal here that we have. And we don't know how long this is going to last, how much people are going to sell. We don't know really the repercussions of this because this is not really an economic thing. The economics are brought down by something independent. So, but anyway, you can assume that this is probably kind of a middle of the road scenario, that they lose 63% and that 350 could be, I wouldn't say a bottom necessarily, but it could be a bottom, So, and if it gets to 250 a share, it's lost 75% on its high. Okay. So that's possible. So it could lose 75%. That is definitely possible. I highly doubt it'll get to 150 and lose 84% of its value. That's super unlikely. Okay. And I put the percent chances on the right. Okay. And the chance that it drops to 50 a share, I wouldn't even bother investing in this company if I thought for any reason that it would drop to 50 a share. I wouldn't even be doing this. So, I put that at a 1% chance of that happening, dropping from $9.50 to $50 a share. Super unlikely. The company has to go bankrupt. It's basically that simple. Not likely. So, and how likely is it to get to 150? Pretty unlikely. Ask yourself this. If tomorrow it was on sale, Tesla sale, $150 a share, how many investors would be buying? Ask yourself that. Okay, that's to be logical. Just ask yourself that. Or would you buy Tesla for 150 a share tomorrow, knowing that we're going into this crazy roller coaster down potentially in the next few months? Would you buy it 150 right now tomorrow, knowing that? I would 100%. Okay, same thing with 250. Would I buy at $250 a share? Absolutely. Okay, so same scenario here with 250. So in my estimation, we could come between 250 and about 350, or maybe at 300. So they say don't pick a bottom, and I disagree with that. Okay, I'm not saying to pick a bottom like exactly. I'm saying you need to estimate where some sort of bottom may be for your buying principles, for your buying practices. If you don't even have some idea of what could happen, and you just wait around and wait around, you can pick this either way. Like I can just literally wait out and wait until it bottoms and comes up and then start cost averaging the other direction, or I can cost average going down. Okay, you can do it really either way. But since I'm basically in the middle of a trade anyway, I'm kind of in that situation where I can either, duck out, take a minor loss, and do it that way, or I could cost average for a long-term situation. So what I'm trying to do is figure out if cost average in this Tesla situation is a good idea, and when to buy, like what price to start buying at and how many shares to buy at. If you don't think Warren Buffett and companies try to figure out what prices they're going to buy X amount of shares, if this hits so-and-so price, I want you to buy a 10,000 block of shares at 350 or 50,000 block of shares at 250. If you don't think they're planning this like perfectly, this is what institutional investors do. I'm just throwing this up. I'm just Joe Schmo, retail investor here. But I'm giving you guys a little bit of data. If you want the spreadsheet, as always, all of my spreadsheets are available to the public. Okay, I want you guys to have these type of spreadsheets and put whatever company you have in, and you can throw the shares that you have in at whatever price, and you can try to figure out your situation. Okay, and figure out, all you have to do is plug in the numbers of whatever company you're working with. You don't even need this for Tesla. You could use this for anything. So basically all you have to do is email Tesla stock 2021 at gmail.com and say, hey, do me a favor. Can I have the spreadsheet for the cost-based averaging? And no problem. I'll just email it over to you. No big deal. Save you the time and hassle. Okay, this is very simple, and you can modify it for your own purposes too, obviously. This is just a general thing that I threw up here because I have to figure out a plan of attack. Do I want to keep adding more shares as it goes down? Do I want to catch a bump? If it bumps, here's another option. So instead of just cost-based averaging my situation, what I could do is I could I could basically wait for some sort of a bounce and then just kind of pull out from there and kill that position, and then kind of wait and see kind of how it plays out. And if it drops lower, then I start cost-based averaging lower regardless. So either way, I'm going to cost-based average. The question is, do I want to do it with the current position that I have running? And figure out how do I want to do that specifically. So this is my general plan. So I'm not sure exactly. So I thought, hey, good idea. If it comes down to 450, throw in 30 shares. Let's see what that does. Okay. And then if it comes down to 350, throw in 40 shares. So you can see I'm not adding a ton of money. It's only adding 13.5 or only adding 14 to the total cost. Total cost, that's the situation. So anyway, so you can see that this is how it kind of breaks down. So you have multiple options you can do. So you don't always have one play. It's like a chess move. I mean, here's what we did. Here's what I did the other day. I got in and then I got some more in pre-market and it still caved. Market obviously came down 2,300 points. That's not something that I predicted or expected, but no big deal. When somebody moves a chess piece over here, I have to move a chess piece over here to counter that. So now we're countering this. And this is what I mean by adapting. I'm not panicking. I'm not afraid of any situation in the market. I've already been through this type of market. I already understand how it works. I understand that this happens. I didn't get that it was going to happen from the situation we're in globally, but you have to be able to adapt to the situation and not overcommit. This is why you need certain amounts of cash and certain amount of positions. You don't want to load up too heavy, 30, 40, 50% of your position in at a specific time. That's not really necessarily a good idea. And the reason being is because you don't have any more chess pieces to play with at that point. So do you understand what I'm talking about with that as far as that goes? You want to have a few pieces on the board. You don't want to be running around with just the queen and just, okay, I'm just going to throw in 100,000 on this position at X dollars and just hope that it works out. Okay, that's not a good strategy, nor is panic a good strategy. Panic is not a good strategy in the market. So there's no reason to panic if you constantly learn how to play the game and learn how to play it right. This is what institutional investors do. They figure out proper prices. They do it based on company evaluations and all kinds of other metrics. I'm just giving you a broad cost-based averaging way to look at things. And this is specific. This is towards me. I mean, I'm literally in this situation where I've got to make a decision between selling the bounce, selling the dead cat bounce, or buying cost-based averaging on a longer term trade. What's the worst case scenario? And this was funny because Market Scraper was mentioned. So the worst case scenario for you is you're going to own 130 shares of Tesla long term. So I would never do this on a company that was speculative because I don't want to be stuck in a speculative stock. I'm only going to do this in the best in breed. So if you don't know what the best in breed is, go to my best in breed video and watch it, because that's important that you choose the best in breed if you're going to be cost-based averaging. You're not doing this. I wouldn't be doing this necessarily with Space. Okay, Space is a speculative stock. I'm actually not doing it with Space. I'm trying to leave extra money, maybe 10 or 20,000 to work with Space trades. So I'm going to have my Tesla position going, and then I want 20K for Space. But even if it's only 10K, I mean, geez, Space is already down to like $13. There's a chance that Space can get to 10. I can buy 1,000 shares for $10,000 of Space, potentially at 10. I've got to look at I might actually have to do a cost-based averaging on Space just to see what's going to be appetizing with that company for the next 5 months. So anyway, if you guys want me to do that, comment on that and let me know if you want me to do the cost-based averaging on Space. If not, you can do it. Just, I'll ship you over the spreadsheet and you can do it. Anyway, I'm going to cut that off up here, and, please subscribe, comment on anything you want, like, share with anybody that wants to invest, share the content, see what they think. I'm all positive for feedback in any way, shape, or form. So anyway, I appreciate all all your comments in the past too, it inspires me to constantly learn to get better myself all the time. I mean, I'm going to constantly be learning. I'm spending hours and hours every day just studying the market and everything about it. So anyway, I wanted to include this. So, we will see you tomorrow. Take care.